The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Starting with the music from Trading Places. That's from Mozart's Wedding of Figueroa. I'm not a big classical. Me saying I'm not a big classical fan is the understatement of the year. Classical music of me is I only like two kinds of music, country and Western. But no, of course, I like the Beach Boys and other things too. But if you ever get to Salzburg, Austria, folks, you have to go see the home of Mozart. It's just a beautiful place. It's got three bells in front of it, much like the old what do they call those things? Pawn shops. And pawn shops started actually in Macau, the island right off of Hong Kong, the Chinese island where we have all the casinos now. That's where pawn shops started back in the 1600s, where the pirates used to come in there and trade their goodies. Okay, we'll start out with, like we usually do here, and that is with the German DAX. And as you can see, we are looking at the oh, Jimmy, you're from Colorado, so you know good country music. But anyway, we're starting out with the DAX. As you can see in that 15-minute chart, we've come down, and we are getting ready to complete a Gartley down there, just a little bit below that 12,000 level. So that's something that you want to, sort of keep an eye on it anyway, because it looks pretty interesting from that point of view. Now, we should also, since we're looking at that DAX, we should look at it on a little bit bigger time frame. And what we'll do here is we'll go and we'll look at it on a 4-hour chart, so that we'll be able to see it that just a little bit lower, down around that 12,000. We're going to be hitting this a pretty significant spot here. And you'll see that it ought to be pretty good. Remember, these patterns, they don't work all the time, but they work more than they fail. That's the key thing. But you have to learn to identify them, and then you also have to be able to, use your own judgment as how much money you're going to risk, because it's not how much money you make in this business, it's how much money you don't lose, and that's the real key to the market. Now, I did want to mention something about a month or so ago. We had a gentleman from the back east. I don't know what his name was. Thank goodness I don't know, because I don't want to get him in any trouble. But let's put this stock up, because this is a stock he was looking at, and he asked me about this stock. And believe me, we were all on the air. And this is a stock called PLUG. I don't have any idea what they make or what they do, and it was trading for $1 a share. And the gentleman had inside, he said he had inside information that the stock was going to double in price. And, my advice to him was, I have never gotten, a tip that ever worked. But let me show you what happened to this stock, folks. You're not going to believe this. Well, I guess you will, because you're going to see the stock here in just a minute. But this is the stock of PLUG, and it's gone from 84 cents to 273. It's more than doubled. And so and now it's backed off a little bit. This used to be a $15 stock, and now it's a $2.20 stock. That doesn't happen very often. Okay, we've got one of our favorite people on the line, John from Philly. Mr. Z, would it be?
Hello, Larry. By the way, PLG, that's Plug Power.
Is that what that is?
Exactly. That was Plug Power, Ballard Power. Those couple of stocks have been amongst alternative energy battery plays. Fuel cell stuff that, as you can see from that long-term chart, has taken a good many speculators to the cleaners over the years.
Yeah. Well, they
Anyway,
sure have, especially if they were looking at the long side or the short side. This had tremendous volatility. That'd be like the Dow going from 1,000 to 10,000.
Indeed.
Yeah.
Anyway, I am calling in to ask you a question regarding some comments you made yesterday.
Mm-hmm.
And on Monday, you showed just a feature of time cycle character of 1987 and 1929. And
Yes.
we know from that past experience, those two market features were virtually identical in the shape that they took and their ferocity. And my question is, what is it you're thinking that leads you to even look at those today, here in 2017? There must be a reason, and I can't figure it out.
Well, what we'll do is we'll go back. Now, this chart that I posted yesterday, I got, I don't know how long ago, several years ago, and I keep it into my Dropbox so that when I file it under, cycle high 29, cycle high 87, so that when I want to go back and look, I can pull it up. But 1987 was a really watershed year for me because I had just written the book Astro Cycles, A Trading Viewpoint. I was on about every 3 weeks. I had a 10-minute segment with Bill Griffith at FNN, which was the Financial News Network, which is now CNBC. And
Can I
had
stop
a lot
you right there?
Sure.
Can I interject something? I will tell you, back there in July and August 1987, that's where I first saw your face on FNN with Bill Griffith. Sorry to interrupt.
No, that's okay. Yeah, that was fun. I got to, be interviewed by Bill and Sue Herrera, and of course Ron Insana. Ron Insana was just out of graduate school at USC and University of Southern California, which is also the University of Spoiled Children. But anyway, what I did was I was watching the comparison between 1929. This is going back 30 years ago, and I realized that was a significant high that we had in 1987 because of the harmonic convergence. We had, 5 planets in the sign of Leo, all at the same day in the same house, which was at August the 25th. That was also the day that George Lindsay, the fellow who had 3 peaks in a domed house, he passed away that day. I didn't know that till many years later. But what I did was, since I was on the show, I told Bill that sometime, during the month of October, the Dow was going to be down more than 300 points. And all I had done was I took the number of points that it had gone up, which was 190 points in one day, and multiplied it times 1.618 to give me 3, because that's the same thing that happened also in 1929, that we had that big type of a break. And so what happened was, fortune smiled on me, and we did bottom down there on October the 19th. And I happened, I was very fortunate because I happened to be short, the stocks. I was short the S&P, and I was long bonds. And John, I have to tell you the story about this because I was long bonds, and I was so afraid that we weren't going to get our money out of the stock market, that I just, I took off my bond position. And with the stocks down 500 points, the bonds were only down a half a point. And I should have realized what a buying opportunity that was. They went up 11 points the next few days. Stay with me, John. We'll finish this up.
Sure thing.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're talking with Mr. Z from Philly, and we were talking about that 1987 market, and I was referring to the fact that I had been short stocks and long bonds, and the bonds were up about or down about a half a point that day, which is not very much considering the Dow was down 500. When that turned the next day, John, you probably remember this, but bonds went 11 points straight up without I don't even think they had a downtick. I mean, they just.
Yes. In fact, I'll just share this with you. While you mentioned you were afraid, you were fearful of not being able to get your money out of market positions, that is, I want to tell you I am much your junior years-wise, and I will confess to you I was in the business professionally then. And that day, I was just plain scared, period.
Yep. I can tell you how scary it was, because it was it's by far the most scary I've ever been in the market. Even worse than in October of 1980 when I was short gold, and Iran and Iraq went to skirmish for about 12 hours, and they said gold was soaring and it was only up like $2. But I had 2 hours of fear there because we didn't have any prices coming in. The gold fix hadn't come in. There was really nothing going on. So, but this time it was, spot on where we were. It's pretty much what we're looking at on some of these things. But all I did during that time was to see if it was going to happen. It worked. Pretty well, and it helped my book sales a great deal, and that was fun. And I made a really good friend in Bill Griffith, and Sue Herrera and I had been friends for many years, and so it was fun. It was old family stuff. I have to tell you a funny story, John. When I first did my first show, I had a new car, a little sports car, and my daughter was learning to drive, and she wanted to drive in the LA traffic from Westlake Village, and so we were driving down the Highway 101. We took Malibu because she liked to drive along the coast, and traffic was a lot better. And so we were driving, and she said to me, she said, "Dad," she says, "you got to do me a good favor." And I said, "What's that?" And she said, "All my friends are going to be watching you on the show today." She said, "Please don't say any bad words." And because she used to hear me in my office, I'd be in my office and something would go wrong, and I would make some kind of a comment, and so anyway, I've stopped that. I'm married to a very nice Christian lady now, and every time I say a bad word, she hits me on the head with a pot. And of course, most of our pots are dented here, so I've cut that back quite a bit.
So, thanks for that. But why here? What makes you think today, here in April of 2017, of even thinking to explore, remind yourself what the time cycle was back in those years, 87 and 29? What are you thinking about?
Well, there are two things. One is it's the work of Bill Ehrman, that Kevin Murphy's taken over. He's had that big day up there. But the main thing that I was looking at was the fact of the Dow gapping up 100 points on March 1st. That was a pretty big astro date. I think the astro date was the second or third, but it gapped up 100 points. If you remember, I think we were 300 points or something that day. We gapped up 100, and then all I did was wait, and we were on our way to Hong Kong, and I was giving a seminar, with some of our trading buddies there. There were about 25 people that we traded with, and I, was trying to find something for them because, we wanted them to make money. And so I went through this whole thing for about 10, 12 hours while I had time in the hotel. And the more I looked at it, I said, wow, I don't know if this is going to work or not, but boy, this is going to be a really low risk trade. I mean, if this thing's up on Tuesday or on Monday, the 6th, I said, this is going to be wrong. But if it doesn't, explode to the upside on March 6th, I said, we're going down. And that's all it was just a factor of looking at the days and looking at the pattern and saying the amount of risk that I had to take at that point was very, very small compared to what the profit objective was going to be. And that was it. There was nothing special like there was in 1987. John, there was nothing in 1929 that I've ever been able to see. And, yesterday was Arch Crawford's birthday, and I spent hours with Arch trying to find something from September the 3rd, 1929, other than a new moon that would cause this, and I never could find it. So, and that's one of the few things, because all of the bottoms are easy to find because there's so much there. The tops are a little more difficult, but that's the only reason. It's just the amount of risk that I had to take to see if I was going to be right.
I see. Very good. Well, thank you on that. Just before I depart, I'll just make an observation and share something that connects to three of your prior guests, which I have to tell you, all your listening audience values very highly. First, since the past 40 days, I've either been in the position personally of being short index futures or looking to get short. And so that's my position. And what I will share is this feature. On April 5th, the NASDAQ 100, Apple, Google, Microsoft, Facebook, Amazon, etc., that index made its record high April 5th at 5480. And three things come together on that very day that I just have to repeat for the benefit of you and your listening audience. One, first coming from Norm Winsky. Norm Winsky had pointed out the value of watching market prices in relation to the squares of numbers, or what Jimmy Sinclair calls angels. In other words, just, 2 squared is 4, 5 squared 25, go up the chain. The square of some number was 5476. The NDX high was 5480. Bullseye. Number 2, Stan Harley, back in February, had identified April 5th as a 34 or 38-week cycle high. Bullseye. NDX high that day. Lastly, Tommy DeMark, somebody you've done business with for 30, if not 40 years. Tommy DeMark invented back in the 80s, maybe the 70s, something that he called his sequential system, which is a system, it's very mechanical, and it is designed to attempt or designed to identify reasonably high odds changes in intermediate-term trend. And the NDX 100 had given a DeMark sequential sell signal a couple days before April 5th. But then April 5th, we had that 5480 NDX high, and then there was that abrupt selling that afternoon after the FOMC minutes where the Fed signaled for the first time that they'd start thinking about shrinking their balance sheet. And we had that sell-off. And on that day, on the close, the DeMark sequential sell system gave a confirmation of its sell signal. All those on April 5th, which I just found absolutely astounding. I can't explain why that works, but a hat tip to you and those three guests of yours.
Well, thanks a lot, John. We appreciate you calling in, my friend, and I hope you enjoy Philly at this time of the year, when you have these 4 or 5 warm days.
Once a year. Thanks so much.
All right, see you later. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I believe I posted the chart from Kevin Murphy into the room here, but evidently it hasn't come up. I'm showing that it came up. I don't know what's the problem is. Anyway, let's take a look here at the stock market. We've had a couple of questions about the Dow here. We had that, if you'll notice on Friday, we completed several small ABCD patterns down there at 20,400. We rallied 160 points yesterday. I think at the most we're going to rally on this is around 20,600, and then we're going to get down to fill that third gap that's down there in the Dow Jones, which is at 20,200. And when we get below that 20,200, then you're going to be looking at something, a whole lot worse. That's basically it. Hey, folks, when I was speaking with John from Philadelphia about, looking at things, whether it's astrology or patterns or anything like that, remember that this is all probabilities. There's a fabulous article on the TFNN major page there that, what do they call that, the front page? Whatever it is, with the front page of the TFNN, there's an article that Tommy O'Brien posted on bracketology, on betting on the 64 teams in the NCAA, what the odds are of some of these things. And that's what we're looking at here, is the odds and probability. That's really the key thing, to keep in mind. It's all about probability. You never know which one's going to work and, which one isn't. There's just some of them work and some of them don't. That's just the bottom line. Now, one that just completed here that we just did for our 24/7 folks was the crude oil. As you can see here, we had a really nice expansion, 3-drive pattern in crude up around that 53.70 per barrel. Now we've completed 2 major ABCDs. We're down about 6 days. Right at the 61% retracement from April the 8th. So that's at the 52.30 level. But here again, we don't know whether 52.30 is going to hold or not. It could go to 51.30 or 49.30. You don't know. So what you have to do is you have to ask yourself, what is it going to cost me to see if whether I'm going to be right or not? That's really what it's all about. Mark Douglas wrote his book, Trading in the Zone, here in the office here in Tucson, and he would drill this into me every day, that on days that I thought that I couldn't possibly lose, he would always remind me that it's only a probability, and he was right time and time again. So the ones that are the most dangerous for me are the ones that look like they don't have any chance of losing. I'll tell you, those are the scariest ones for me, and it's actually a good thing, because fear is a good thing. It protects yourself against yourself. So I try to keep my stops, just as tight as I possibly can on trades that are, really, really close. And there's always a lot of those. But remember, if you can be right, 5 or 6 times out of 10, and keep your stops relatively, small, but not too small. There's another factor. If you keep them too small, you're going to get caught in the flutter of the market. But for trading purposes, somewhere between, $300 and $800 is about all you have to risk on just about anything that you have to do. And when one of them comes up, that hits really good, then that's the one that pays the bills, that takes care of the ones that don't work. But it's all about probabilities. And the difference between a new trader and someone that's been trading a lot is that the person that's been trading a lot, he doesn't care. I mean, you forget that bad trade just as fast as you possibly can. Folks, John Hill told me this once about trading, that it was always good. If you have a child that's learning to ride a bike age 5 or 6, and this child keeps falling over, do you push the bike away and tell the kid he's no good and he can't do anything? Of course not. You give him encouragement. You put Band-Aids on him to let him keep going until they finally take off, and then you don't see him again for a week as they ride their bikes away. And that's the same thing it is with trading. You got to pass it on and say, that's it. It's all over. It's no big deal. And you just go. It's just, if you've ever done, I've never done telemarketing or anything, but a telemarketer, he has to make 100 calls before he catches the 2 or 3 people that are finally going to listen to what his pitch is going to be. So the more he uses the phone, the more he's going to be successful. Yes, that's what, never, never give up. That's my favorite quote from Winston Churchill. from 1939, and I really enjoy that very much. As a matter of fact, there's a park bench in Philadelphia that we have our grandkids, Kevin's the father, is Avery and Mitchell sitting there, and on the bench it says, "Never, never give up," which is a quote from Winston Churchill from 1939. He walked up on the stage at one of the big, I think it was Cambridge or someplace, and his announcement address was those words, "Never, never, never give up," and he walked off the stage. So anyway, we'll keep an eye on this. Okay, now remember, when I'm looking at a possible big move down here, remember, it's possible. That's the key word, is possible. It doesn't necessarily mean, that it's going to be the same thing. Now, I had another question about inside information, and that is, I have been doing this, folks, for a great deal of time, and I can promise you that the number of times that I've had inside information you could write on one hand, on one little tiny finger in bold-faced type. I mean, it never happens. I mean, all my years at Drexel, any of that stuff, I never had anything like that happen at all. So, just keep in mind that it's nothing more than, probabilities that we're dealing with. I remember one particular time at Drexel, there was a stock called Resorts International. It was a gambling stock because they were starting to get gambling away from Las Vegas. This was in the late 70s, and of course Vegas was, certainly against it. But some of the Caribbean countries and stuff were getting, gambling stuff. And so what happened was they would take these particular the stock, and it was really, really active. I mean, it was crazy. And what happened was all of the stock companies, Drexel and Kidder Peabody and Thompson McKinnon, all these, Dean Witter, all of them raised the margin on it to 200% if you wanted to go short. And so that was a thing. And so Drexel had a special announcement that the only way you could go short, Resorts International, was to go into this one's my beeper, my alert's going off here, is to put 200% up. And I happened to be going past the meeting room that Monday morning, and I was listening to him talk, and the stock was 100 and something, and everybody in the room thought it was going to go to 200, and it was crazy for anybody to go short. And so I said, well, I looked at the pattern, and I actually, the only way you could get stock charts was through IBD, Investors Business Daily, and my daughter happened to be dating, the son of Bill O'Neill, and so I called over there and asked him to, get me a chart. And there was somebody in the office that had IBD, and I went over and I looked at Resorts International, and it was making a beautiful 3-drive pattern. And I said, well, I'm going to give it a shot here. And so I went in to sell it, and they refused to take the order. The office manager came in, and he said, you've been denied to short this. I said, why? I said, I got more than enough money to cover it. And he said, no, they don't want you to lose any money. I walked into the office and I said, are you preventing me from doing this? And he said, no, if you want to do it. So I doubled the order, and it dropped 9 points, and I covered it. And that was my only time of inside information. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to take a look here at the euro. As you can see here, we're completing an ABCD pattern here up at this 107 level. What's interesting about this is a shorter term chart, but if we take a look at the euro and we look at it on a 4-hour chart, you're going to see something very unusual, and that is you're going to see a perfect ABCD pattern coming in at a 382 retracement of the move down from late March, which was the big ABCD. So this is going to be very important, this level of around 107 here in the euro. So far, we believe I hit 106.98 so far today. But if we get above 108, then this would certainly be, actually not even that. If you get above 107.50, this would be a broken pattern. But right now, it's doing exactly what it's supposed to be doing, and so just keep an eye on that. We're seeing the same thing in some of these other currencies, like the British pound has made some new highs here. And also we've had some movement here in the Canadian dollar that's still in a trading range, but also could be in an area where it would run into some pretty strong resistance. The other one that is big, and of course, this is one of the reasons why you're seeing the bonds and notes. Now, I wanted to post this chart that we talked about yesterday about the German Bund, because this is the 30-year bond, out of Germany. And as you can see here, yesterday, we made that big ABCD pattern absolutely perfectly. It was 22 days up in the AB leg. It was 22 days up in the CD leg. The AB and the CD leg were absolutely perfectly equal in price and time. But, folks, if we get back above that high we made just on Friday, that tells us that we're most probably getting ready to go even higher. It might go 25, it might go 28 days. We really don't know. We're still in some pretty stiff resistance in the bonds and notes at these levels that we're looking at, but that doesn't mean that these things are going to stay at those levels. That's an easy thing to realize, that if these things fail, they can go a great deal higher. So pay attention to these, because you don't want to stand in front of a freight train or try to catch a falling knife. You don't need to really do that. If you'll just, spend some time at risk control and not worry about the rest of it, keep in mind that that's what you're going to be looking at. Now, let's just get back to something not as crazy as all these other things, and we'll just look at this really closely. This is the take a look. Someone's asking me to take a look at GDX. Just a second, I will do the GDX when we come back from the break, because I can't get the stuff to come up here, but I know what the gold is doing, and I know that's what GDX is. But take a look at the hog chart here, folks. Back in October, we were under cost of production. We had a big move up, and now we've had a 61% retracement, and there's a nice 3-drive pattern here in the hogs. So if you have a tendency that you want to trade hogs, this would be a place that you could look at them, and you don't have to worry about whether it's going to be working or not, because you only have to risk 2 cents, which is around $800 in hogs, and that's a maximum, because usually you can get by with a penny or penny and a half. But keep an eye on that. Okay, now the only thing I can tell you on the gold, folks, is let's just put this up here a little bit. Yesterday, gold made a really nice retracement. We were down $14 from the high, and it's actually held that level relatively well. But if we get below this 1280 level in gold, that's going to be a very, very bad sign, folks. That's not going to be a good thing for this to happen, because the fact that we had these long expansions in the gold, but silver and platinum did not follow through, nor did the XAU, and nor did the HUI, the Bull Bear Index. So all of those are telling us that there's trouble in River City when it comes to the bonds. Let me show you this. I did this yesterday, but we'll just do it. Just take a look at the XAU. Just look how weak the XAU is compared to the gold, folks. Just look at this. The XAU could barely make the 61% retracement, and gold has made a huge ABCD expansion just right at the 61% retracement from the July highs. That's not how these markets work. They go together. No, yeah, the great minds think alike. 2 minds together. Yours and yours is the great mind, and then my mind do that. So keep in mind, it's just an opinion. It's just a pattern. That's the main thing that you want to keep an eye on. Because by the time people see that this was a trap in gold, gold's going to be down, quite a bit. Now we have a question from our good friend up in Washington. Marshall's asking about the wheat. I think wheat, if it can hold those lows we made just a few days ago, I don't know whether wheat's up or down or not today, but I was actually looking to, go long some July beans today, because they had a pretty good run on Friday and Monday. Now they're pulling back to a 61% retracement. So it's the stronger the complex. So that's what I'm looking at. But this is one of those things that here you're trading a contract of soybeans that's roughly $10 at $5. It's a $50,000 contract, and you can trade it for 6 cents, $300. I mean, where are you going to get that type of action? That's you just don't get that. And we're into that. We're getting ready to start the planting. Well, we already started the planting season, so pretty soon you're going to start seeing hot weather, cold weather, warm weather, wet weather, cold weather, whatever it is. There's going to be 1 or 2 crop scares during the year, and just try to look at the patterns, folks. Those of you that are at the TFNN family here, that are in the Tiger Den, if you're trading actively and you want to get some great information, there are some really smart people in this room. I don't know how Tom screens them, but boy, there's really there's some really smart folks in there. So keep in mind that you are going to see several crop scares in these. I'm looking for a place to get long wheat, corn, and beans. And today I'm just looking, this is on a personal basis, just watching, see if these July beans are going to hold the 953 level. But this is something that we want to keep an eye on, because there will be some good opportunities here, and we'll see if that's it. Yes, we could very easily see beans at 850. There's no question about it, because we break below that 940 level, or in November beans. If we get down below that, you'll probably be looking at that easily. But we're just starting, the real exciting part of the grain markets, which is the planting and growing season. And we haven't had a crop failure here in a long, long time. And if any demand comes in from, some other places that are having trouble, you can see these beans got to $18 once, boys and girls. That's a big run. You can't knock that. That's one heck of a run here. Well, we got the stocks, let's see, we got the Dow Jones is down about 60. It's come back a little bit. The S&P's come back quite a bit. It's went down from 35 up to 41. The resistance there is around 47. We'll see if that's going to mean anything. Bonds made a slightly higher high by one tick over the previous days, but whether that's going to mean anything or not, we'll have to keep that in mind, but watch it rather closely. But those are the things that, gold's breaking down now. See, folks, we're down. We just dropped about $7 in gold in the last 15 minutes. We got down to the 1281 with a really wide bar. That's not good for the gold buffs. So keep in mind that that's something you want to, watch. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've been reminded by some smart people here in the den that we're now down almost exactly $17, which is our 1/2 of a harmonic number in gold. From our high that we made at 12.98, we hit 12.81. So we hit that pretty much spot on. I posted the chart so that you folks could take a look at it. But it's really at really critical resistance here at the 1280 level. Now, it's much better from a risk-reward ratio to buy it at the 1280 than it is at 1298. That's just a simple mathematics. So watch that. The other one that looks really interesting from a really good long-term perspective, folks, is the crude oil market. If you take a look here in the crude, we posted this before, but we went down. We were covering our short at the 52.30 level this morning, but that was nothing more than a 382 of the whole move from way back on April the 1st. So, it took the market to drop just $1.50 a barrel. It took the market well over 7 days to do that. That's usually a positive thing. So watch the oil. That might surprise a few people here in this area. So that's another thing. Now, the one that looks the most vulnerable here is the Treasury notes and Treasury bonds. But again, if this is wrong, we're going to see 155 in those June bonds. And I checked the open interest yesterday, folks, because we didn't have much happening, but there was a slight increase. We had decreases on Tuesday, Wednesday, basically unchanged on Thursday, and yesterday we had a very slight increase in the bonds, but that was on a down day, so that's not a bullish sign either. So it's all related to these currencies, and we hit so many numbers this morning, folks, on all those currencies and the bonds. It's very, very, very interesting that we're hitting these. Remember, tomorrow we're going to have the wizard from Florida. Mr. Winsky will be on, and Norm will give us some great information. He always does, and we will look forward to hearing from him. And next week, I'm really hoping we're going to be able to have Bill Meridian. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.